Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the ES, and we're down. We're down 1% at this point, and it's all about Ukraine. So we're going to have to see what the market wants to do during the regular session. So you've got, the market's down. There's going to be a persistent bid under oil, at least for a little while, in my opinion, and there's going to be a persistent bid under gold while all this gets sorted out. What we saw on Friday, we saw that little dip on Friday that then turned into another V bottom. We made effectively 3 V bottoms last week. Now, setting Ukraine aside for a minute, okay? We'll get to that in a second. What we've seen from the bulls in this past week may have been new highs, but they were not new highs made in a way that they were back in 2013. On Monday, you had new highs up at 56, which were immediately given back, and we even traded below the prior high, which was 46. So you had new highs by 10 handles, losing the highs, and then losing the prior high. Okay? Then we go down and trade as low as 32. We fight our way back, get back up through 56, make new highs on Friday of 66. Those highs are immediately given back, and the prior highs are immediately given back. 66, 56 given back. And we trade as low as 45s. So this two-sided action, the inability to defend highs and to create support levels immediately out of prior highs it's hard to call it bearish because we keep making new highs, but in reality, that's what it is. It's not a bullish development. A bullish development would be to make new highs and continue to make highs. Now, things have reversed themselves based on news. So I think everybody is sitting around waiting for a V bottom, but I'm not necessarily sure that that's going to come. I would be very surprised if we reversed off of these lows and went all the way back up to make new highs from here. I think we're going to reverse off these lows and make a lower high versus 1866 half. The question then becomes, do we get a second push that pushes us below this 1834.76 fib level, and then you start to look at this confluence of things between 1812 and 1816 or so. That's the middle band, the 50-day exponential moving average, a 38% retracement of the original move from 1732 to 1866 half, as well as the 26% retracement of the October lows to the 1866 half highs. So there's a lot going on down there. If bulls need an excuse to take profits, they definitely got it Friday and today. If the bears want to push it down and test the middle band, and we'll have decision time down there in the middle band, then this is how we do it. If Ukraine escalates, obviously, I think that's going to keep pressure under the market for a lot longer than one overnight session. But we'll have to see how all that plays out. We're back into what I have always called over the years the headline minefield. And the headline minefield is this. It works like this. You get a headline out of Europe. The whole thing originated in Greece. You get a headline in Europe, somebody says something outrageous, the market either spikes or drops on the statement. Then that statement tends to be, although not always, but it tends to be redacted or refuted, denied, whatever. And then something a lot more palatable is issued. And then you'll see that get faded back. So just understand that a lot of the bottom line is a lot of these headline comments that are going to be coming out about troop movements, about what Putin is saying, about what Kerry is saying, about what the president is saying. A lot of those moves, when they spike in one direction or the other, are going to be fades back to what was happening before the statement. So if we're trading 1820, then a statement comes out and we spike to 1828, chances are we're going to fade back towards 1820 and then resume what we were doing beforehand. Okay? The real news tends to come a lot slower tends not to be a shock event. But you've really got to, if you've been long and you're a big long all the way up here, at a minimum, you need to be hedging. You need to be taking profits. You need to be. Everybody needs, long or short. You got to be using stops. You have to, really control your size and understand that we are in a pretty volatile environment right now, and that we're outside of the norm of the market. The charts aren't going to tell us when, what's going on in Ukraine. Okay, the charts kind of foretold a drop, and all that uncertainty from last week may have had a little bit to do with this, and it finally played out Friday afternoon. But you just have to understand that we're in a very volatile environment, and you have to take precautions to protect your trading account. So be hedged, use stops, control your size, okay, and live to trade another day. All right, everybody have a great day. I'll be back tomorrow morning with another webcast. Trade them well, everybody.